Hello. Hello, everyone. Hi, evening. Okay, hi, Isaac. Welcome back to another week of episode together with me. All right, this portfolio building with Terence. So, our aims for every Monday evening is actually very simple and very direct. All right, so what we're going to do over here is to aim to put down an option sell trade. Okay, give me a minute. Okay, we're going to aim to put down an option sell trade over here in each session to craft out a balanced portfolio over here, right? That takes care not only of the profitability, but also the risk nature of the market as well. Now, so we continuously invite all of you to join us each and every week, as well as, to bring your friends along who are or who have been looking to invest with a basket of good stocks, and also to ensure that their portfolio is actually very well balanced, right? Yes, Josephine, I can see your name right now. Now, so unfortunately, let me just do a little quick brief on the StreamYard software. Every time we do it in a new group together with all of you, okay, every time we do it in a new group together with all of you, you will need to click on the StreamYard button, the StreamYard URL at least once, okay, just so that the StreamYard would be able to have access to your profile. So when you make a post, all right, we would actually be able to see it on the back end of our screens over here. Right now, so for those of you who have just joined us, let me just quickly go through this process once again. All right, thank you very much. Now, so this is how the post and the live session looks like on Facebook. So what I will need all of you to do is to actually click on this StreamYard link /Facebook, all right? And once you click on it, it will actually prompt a pop-up. Okay, it'll bring you to StreamYard where there's a blue button which allows them to, all right, there you go. Right, let StreamYard see your Facebook. All right, let StreamYard see your Facebook during live comments. Okay, so when you click on this over here, you approve your profile so that when you leave a comment on Facebook, we will actually be able to see who's leaving the comments on the back end. All right, so I still have some of you who are labeled as Facebook users. All right, so I won't be able to address you by person. Now, if you see the comments that I'm flashing you in front of you right now, okay, you will be able to tell that you may have left a comment. I believe this was probably Jim. All right, okay, this is probably Jim as well as Benjamin. All right, I can't see you on our system because you just appear as Facebook user. Okay, thank you very much. All right, now, so remember to click on the URL. So after that, once you grant access, we'll be able to know, who's leaving the comments over here. All right. Yes, Ikai, yes, no problem. I can see you right now. Okay, thank you very much. So that's all I'm going to go through over here. Yes, Jim, yes. It's just the software and how it works over here. Okay, now, thank you very much for joining me in yet another week of sessions over here. All right, so let's get ourselves started. Okay, hi, Anthony, welcome. Okay, let's get ourselves started over here. And this week, all right, this week I have a very interesting notification for all of you. Right, as much as we all know right now, markets are breaking new high. All right, so along with markets breaking new high, what we have right now is really an environment, okay, where it's actually kind of difficult, right? It's actually kind of difficult to build a portfolio over here without taking on any substantial risk. Okay, without taking on any substantial risk. Now, let me highlight a little bit of what I mean over here. Okay, I'm just going to quickly share my screens right now. Okay, so I can kind of draft why I make my decisions in terms of the trades I'm selecting for today. Okay, now, so what you see on the screen right now is actually the S&P 500. All right, so I'm just showing you the SPX, which is the S&P 500 index. Okay, so what we are seeing over here is from here to here. Okay, let me just bring out drawing two. Okay, so from here to here, we can actually see that the market is going up. Oh, no. Sorry about that. Okay, we can actually see that the market has made new highs. Okay, and what's interesting enough is that we should not be shorting the market yet. Okay, now, why do I say we should not be shorting the market yet? Okay, that's because there is momentum that is following this move over here, right? Because for the momentum indicator, all right, you can actually see that the RSI is making a new high as well. Okay, now, so from a technical trader perspective, this simply means that this market has legs behind it, right? So there's legs behind it and behind this market over here, right? So what we need to do is to get a little bit more perspective of, how close are we, or, how risky it is to actually get into the market right now. One of the things that if you saw in my post earlier in the public group, okay, and that was really to lengthen the time frame, right? So instead of looking at daily charts over here, you might want to pull out the weekly charts, okay? Because when you pull out the weekly charts, you start to see something a little bit different over here, right? Now, a little bit different because you have, if you noticed over here, right, back in earlier the start of this year before the COVID market crash, right? What we have is we have this little divergence of the RSI, all right, so where you can see that while the market is making newer highs, all right, that means it's moving upwards, but the momentum indicator is actually signaling downwards. Okay, and right now we don't have it yet. Okay, we don't have it yet because all we see right now is only the RSI flattening, all right, flattening. All right, now, so yes, while the market looks overstretched, it still has some room to go. Okay, it still has some room to go, which means we can see it go all the way to like 3,700, 3,900 before there is any real threat to the markets. Okay, the other way where we'll see a threat is probably the back earlier this year, if the market goes up, but you start to see that the RSI starts turning down, especially on the weekly basis over here. All right, now that's when you want to start pulling out all your profitable trades from the markets, all right, and start to go into a little bit more cash or trade on the downside over here to kind of balance your portfolio. Okay, but having said that over here, this also means that a lot of the stocks, okay, for example, a lot of the great stocks, as you would see, okay, for example, if I'm showing you P&G right now, okay, it shows you a very, very interesting signs over here. Okay, it shows you a very interesting sign because on a weekly charts on these great stocks, while these stocks are inking out new highs over here, right, same as well after the COVID market correction, right, while they're inking out new highs over here, you can start to see that the RSI is also flattening. Right now, this simply means that momentum is grinding to a halt. Okay, so it doesn't make sense for you to force any trades into this stocks over here, or to actually go into the market and buy these stocks right now. Okay, as you can see as well, we have this is Colgate-Palmolive, right? So it's also flattening out over here, right? And then let's just bring out some of the big guns in the market, all right, in terms of fundamental companies over here. Right, and then we have Coca-Cola over here, which is flattening, and you can see the indicator on top actually shows that the momentum on Coca-Cola is actually down. Yeah. Okay. Now, couple that together with let's take some hot derivatives as well. Okay. Now, the main market pulling factor right now is of course Apple. All right. So we have Apple inking new highs as well. Okay, but you can start to see that the RSI is really, really overbought. Okay, and what's really interesting as well is while it's making new highs over here, as compared to before the COVID market correction, right? You can realize that the RSI is actually still much lower. Okay, it's actually much lower. So this is what we'll call a divergence over here, but the signal is not formed until we have this hooking downwards, right? That means this hooking downwards and then cutting back below the 70 over here. Now, so this points to a lot of risk in the market right now. Okay, now it's not imminent, which means it will not like happen tomorrow, right? Of course, I wouldn't know. Okay, but the main thing right now is because of that, I'll just want to do a little bit of trade management on trades that starts to make sense for me to take profits off the table. Okay, now, so having said that over here, let's quickly have a look. Let me just share my screens on some of the trades or our portfolio over here in what we've built so far. Right now, so there are some trades that are unclosed at the moment, right? Which means we have KMI right now, which expires on 18th of September, right? The market premiums right now for this trade is actually 10 cents for today. So I'm not gonna just about leave it. I'm just gonna leave it for now over here, right? We have about slightly about 2 weeks left to go, right? 2 weeks left to go. So I'm just gonna hang on for this final 10 cents over here. Right now, and then the next one over here is we have AT&T for 16th of October. Right, so the premiums for AT&T today for 16th of October, $29 put is actually going at about 62 cents. Okay, so let me just record this down over here, 62 cents. Okay, now, so we have about another 1.5 months to go over here. All right, so we are right on cue. Okay, we are right on cue because we entered this trade in July, which makes October a 3-month trade. All right, and we're trying to collect about $1.20 in 3 months. We are about halfway into the trade, and we have collected also about half the premiums. Okay, so I'm going to stay into this trade as well. Now, the next one that we have over here is Intel. Okay, and Intel, we took a much longer expiry all the way to January next year. Okay, so we have Intel right now, and the market premiums have actually gone back down because Intel has gone back up, right? So the market premiums right now at about $4. Okay, $4 over here. All right, so we're starting to see some profitability on it. Okay, but nowhere near what we want to take it off the table, so we'll leave it at the moment. All right, now, so WBA, we have a $40 put option. All right, so the stock has gone weak last week. So right now we are a little bit underwater. All right, so this market premium, however, is interestingly at 430. All right, because of time decay. All right, so after 1 month has passed, okay, so we are at about break even right now. So no management actions. Next, we have USB, right, which is a banking stock that we took up our position on. Okay, so we also took a January expiry for $35 put option. Today, it's worth about $3, right? So we are around about break even as well on this. So no actions taken, right? We took on another banking stock over here in PVCT, right? A slightly smaller size banking stock for November expiry. Okay, and this was for $11 puts, which happens to be about $1.20 today. Right now, so no actions as well. It seems like we can't take on any trade managements for tonight. So I'm just going to leave the trades on the table. Our last one was taken last week for Nokia, right? For November expiry, a $5 put, which is right now at about 45 cents. Okay, now, so we have effectively no trade management positions because while the markets went up, okay, it was really the tech stocks that was pushing the markets up. So a lot of these fundamental stocks did not partake in the move. Okay, so no management actions, but I will have to add on the trade tonight into the portfolio, right? So what am I going to do? Okay, what am I going to do with the entire stock market at kind of overvalued kind of aspects over here? So what I want to do this week is I actually surprisingly, okay, I want to add a dynamic hedge into my entire portfolio, right? Which means, okay, if the market kind of tanks, okay, or does a swift correction, okay, which it may not because of what Jerome Powell just announced to the market, all right, of low interest rates sticking around, okay, for a long time now, okay, but it doesn't harm to also pack a little bit of insurance on the portfolio while we have so many long positions in the market. Right now, I say long positions because although we are selling put options, they are portfolio put options, which means, right, I'm perfectly okay with taking up ownerships on these stocks, any of these stocks over here, right, at the strike prices that I've sold. Okay, now, so that means if I actually end up buying the stocks, I will be having a long stock portfolio, which means building up a stock purchase portfolio. So what I'm going to do this week is I'm going to add a protection to the entire portfolio. Okay, and for this protection over here, all right, what I'm going to do is I'm actually going to sell the volatility options. All right, this may be a little bit of a surprise for some of you who will be new with us, all right, but I will be selling options on the volatility index. Okay, now, so just some little guides over here before I go into it. One thing that's going to happen over here is the volatility index, okay, is actually a measure of call and put options that are being purchased on the S&P 500, okay, especially for the VIX. Okay, so what typically happens over here then is this. Okay, if the market collapses or the market corrects, okay, we will have the volatility spiking up. Okay, and then, okay, if the market goes up, we will have the volatility dropping off. Okay, so as you can see over here throughout the entire period of 2018, right, early 2018 all the way till early this year, all right, we had a really, really low VIX environment, all right, where VIX was sitting really at about like 13, all right, a high of 20, all right, and a low of about 12 over here, right? So we had VIX trading about between 12 to 23 over here. So right now, although we are hitting a new market high, this is the interesting thing you have to spot as well, okay? Now, while we retail investors are getting very, very optimistic, All right, the professionals in the market are not so. Okay, because you realize that the volatility as compared to before COVID crash is actually relatively high. Right, so back then when we were inking out new highs every day, early this year, right, the volatility was actually sitting at 13 levels. That means nobody was afraid. Okay, but right now, okay, we actually have the volatility sitting at 25. Okay, while the market is making new highs every day. Right, so that means on the professional side, all right, they are more than prepared. Okay, or hedging themselves. Okay, with trade positions or options on volatility index. Okay, now, so we start to have more people streaming in. Thank you very much for joining us on this session. If you have not already clicked the share button, all right, do me a favor, click the share button right now so you can reach out to your friends as well who may be interested to find out on today's position. Now, so what I'm going to do is I'm actually going to take out a low over here right now. It's about 21, okay, on the VIX. Okay, so what I'm going to do over here is effectively this. I'm going to go out right now, okay, I'm going to attempt to sell. Oops, there's the wrong stock. Okay, the volatility index options, right? So what I'm going to do is I'm going to aim to sell the November expiry, all right, which is going to expire just before the elections, right? The American elections itself. So I expect volatility to stay high all the way until then, all right? So I'm going to try to attempt to sell the $23 strike put option, okay, the 23 put option over here for about 115. Right, which is down the middle of here. Right, so I'm going to take a typical portfolio size, which means a 3-contract trade over here, right, for $1.15. So let me just place the orders right now and see if we can get it filled. Okay. Okay, now, so I've sent the order through, but it has not reached the platform. As you can see, 115 is still not reflected over here. All right, so it's probably going to take some time for it to get reflected. Yes, it's finally there. All right, so the 115 is finally there, but it's not getting taken up. Now, so eventually what's going to happen here is this. If the market corrects, okay, if the market corrects, so the VIX is actually going to go higher. Right, so when the VIX goes higher, this put option that I've sold is going to end up expiring worthless. Right, so that's the aim that I have for this trade. Right now, also if the market corrects over here, some of our trades will still be safe, which means when they reach expiry, they might expire worthless. But some of these trades, I may actually end up holding the stock positions on them. All right, I'll turn around and sell covered calls on them. Okay, but because holding the stock would mean that I will be staring at some paper losses. So selling these VIX options would actually allow me to yield or get a little bit of hedge onto the portfolio as well. Okay, now, so let's go about and calculate the returns. Let me get the order filled first. Okay, 115 is not biting. All right, so let me try to move it a little bit. Okay, it seems like these options are moving in 5-cent intervals. All right, so let's see if I can submit like the in between of it. It doesn't. All right, so it's either I'm going to take a 110 or a 115 over here. All right, now, so I'm not going to be too fussy over here, all right, because I do want to add it to my portfolio. So I'll just get it done for 110. Okay, for while the rest of you can actually wait to get it filled at 115 over here, all right? It's not a major issue. This is a very interesting one. I matched it to the market, all right, but they're not filling my orders as yet at the moment, all right? So I'll just have to wait around a little bit. Right now, so while I'm waiting around, let's do a quick calculation on the ROI on this potential trade over here, all right, and the total cash flows on our portfolio. All right, now, so this is going to be trade number 9 today, all right, where I'm going to load up the VIX options, the VIX portfolio put options. For this expiry is a little bit different. It's 17th of November, right, and then it's going to be the 23 put over here. And today is actually 31st of August. Right, I'm going to try to get this done for 110, which is still not biting. So 110 over here will bring $330 in cash flow into the portfolio, right? That will bring our entire portfolio in 9 sessions of cash flow so far to close to about $6,000, right? How much we would have invested or staked into the market right now with the 8 positions that are kept open, right? We are staking about a $71,000 portfolio right now, okay, on the entire size that I've taken out in the market, right? Now, so what else is there? All right, yes, I need to calculate the ROI on this trade. Now, so what I'm going to do over here is I'm going to put a cash secured put over here. So I'm going to put up the $23 to buy the VIX over here if I need to, all right at the end. Okay, although for this position, there's no real underlying, all right? The underlying is actually the futures contract, all right? So I will have to close this put option before it expires, okay, before it actually expires. Okay, now, so it's done slightly different over here. Okay, now, so what I'm going to do is I'm going to collect 110. Okay, now, so this brings about a 5% ROI trade, okay, which would then mean this is about 3 months from now, 74 days. So if I'm able to make 5% over here every 3 months, that will make this an annualized return at about 20% over here. All right, so that's still hitting our targeted aim over here of a 2-digit ROI portfolio for every option sell that we want to create in this segment over here. Okay, right now, so somehow, let's see what happens right here. I can't get it filled. It is the market price. Okay, I have absolutely no idea why it's not getting it filled. Okay, but it is such as it is. So I'll just have to wait for the market to fill. But in the meantime, while we wait for the market to grab my offer over here, I will continue to look for some alternatives that I may possibly add. But as well, what we can do over here is if you have any questions that you want to put out in the comment section, I do have some time, all right? So I can actually address some of the questions that you may have for these portfolio building sessions with Terence so far, okay? Right, so leave your question in the comments over here, right? And I should be able to help you answer some of them. Right? Seems like nobody has any suggestions over here. All right, let me just weigh out the ROI on another trade that I'm looking at right now, okay, and see where it brings us over here. Divided by... No, nothing fancy. Now the market's really not giving out any deals over here, right? Now, so I can't get this taken up tonight. It's very, very interesting. Let me see if I have an alternative over here. Oops. Sorry, the computer is lagging on the back end. no idea what it's trying to do. Okay. Okay, I'm just gonna submit a different order for a different strike to just see if it will get taken, it will get filled in the market over here for a slightly different strike. Oh, so YC, you're filled for $1. Okay, great. So yes, that's I have no idea. Okay, I've got it done. All right. I think it was probably something to do with the order that I submitted. Some of you have already mentioned that you got it done. All right. Some of you did it at Interactive Brokers and you got it closed for, got it filled for 110, right? Now, so that was what I was trying to do earlier, but I couldn't get it filled. Okay, I couldn't get the order for the 23 put strike filled. So what I did instead was I filled the 22 put strike at 80 cents over here. Right, so that was what I meant. I was trying a different strike. I took it on the bid price, and the moment I sent the order, it got filled. Okay, the moment I sent the order, it got filled. Okay, now, so how the broker shows the expiry is just slightly different because for this volatility index options, it expires on, if I'm not wrong, 17th of November is a Wednesday or a Thursday. Let me check and confirm it. Yes, it expires on Wednesday. Okay, but these are what we call AM settlements. Okay, AM settlements, which means the last time you can trade these options are actually the day before on Tuesday. So the moment the market closes on Tuesday, these options are no longer tradable. Okay, but what they do is the settlement price for these options are taken on the Wednesday opening. That's why you see an AM in bracket over there. Okay, now, so they are AM settled, which means the settlement price will not be taken from Tuesday's market close, but the settlement price will be taken from Wednesday market opening. But however, your options have already expired. Okay, so TD just reflects it because it shows that it's the next day's AM. But however, Interactive Broker shows the 17th because that was the last day you can trade it. So just different brokers shows different expiries because they own their system. Right. So some of you managed to get it filled for 114. Great. Okay. Now, so I just tweaked the trade a little bit over here, but we will follow the official trade since some of you have got it filled at 110. So I'll just record it as 110 over here. All right. Now, so just for everyone to verify. Okay. So we have a couple who have placed the orders like YC over here, as well as Anthony, all right, who have got it filled for 110. Okay, we have Wyman who has filled it for 114 as well. Okay, so yes, doesn't matter. All right, I've done slightly different trade, but we will manage the 23 over here. Okay, all right, now, so that brings me to the close of today's session over here. So what am I looking at? Okay, my entire portfolios are all on equities. So all 7 positions right now are in equity positions, which means if anything happens, all right, I'll be a willing owner of these stocks at these strike prices over here. Okay, however, today, all right, we are taking out a put option sell on the volatility index, okay, which is the opposite movement to the entire market. All right, so we're doing this as a hedge for the entire portfolio that we're taking out. All right, now, so that's what we have over here, and I hope you enjoyed this segment over here that I brought for yet another week. We're just about over at half an hour mark. So once again, I hope you enjoyed the sessions on another stock that we have added. Let's see what the market has in store for all of us. And if you are enjoying some long positions on some of the major tech stocks, remember, this is the time you need to hedge your positions. Yes, it can scream higher upwards, but every day it screams higher, right? It comes with added risk over here. Okay, now, so I'll see all of you in our next episode over here next following Monday at 9:30 p.m. Thank you very much. Remember to help me click the share buttons on the video if you have enjoyed it, and also assist us to share our new public Facebook groups with any of your friends who are investing right now or looking to embark on their investment journeys. Yeah. All right. Let me put it out. Awesome. Okay. Now, so scrolling down at the bottom over here. So take note of the address, and if you have not already done so, okay, you can scan our QR codes as well, which will get you into the Telegram group that we have set up. And in the Telegram group, we have actually posted our Facebook group link over there as well. Okay, now, so do help me as well. Join in the discussions because we are putting out topics over here. So join in our discussions as we try to encourage a more, interactive community over there, right, where everyone can learn a little bit more every single day. Buhari, we did, as you can see over there, we did the Nokia $5 put for 20th November expiry for about 39 cents credit. All right, that was done last week over here in our last episode. Okay, if you want to find out more, you can just go over to the Facebook group, play out last week's episode over here. All right, and you'll be able to find out more after that. Okay, I hope you enjoyed this segment over here. I'll see you same time next week. All right, on Facebook Live. Thank you very much, everyone. All right, have a lovely evening and a lovely trading week ahead. Bye-bye.